Hello and welcome to Simplicity in Stocks. In the stock market, investors are bombarded with data, opinions, and constant market noise. But some signals still stand out. One of them is when promoters increase their stake in their own company. After all, promoters know their business better than anyone else. Legendary investor Peter Lynch summed this up very well. A rise in promoter holding can point investors towards companies worth studying, especially when it's supported by improving fundamentals. In this video, we will look at three companies where promoters increased their stake during the June 2026 quarter and examine whether the underlying fundamentals justify the confidence. Please note this video is for information purposes only. It's not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. SG Finserve Limited. SG Finserve Limited, SGFL, is a RBI registered non-banking financial company (NBFC) headquartered in Delhi NCR. The company is part of the APL Apollo Group. It functions as a financing partner across the supply chain, extending credit to dealers, distributors, retailers, vendors, and suppliers linked to large Indian corporates. Promoter holding increased from 52.9% in March 2026 to 56.9% in June 2026. Now coming to the financials, it has delivered its strongest quarter to date in Q1 FY27, marked by record loan book growth. Operating income more than doubled year on year, up 102% to Rs 1.3 billion, up from 675 million rupees in Q1 FY26. Net interest income increased 92% YOY to Rs 820.6 million. The profit after tax surged 119% YOY to an all-time high of Rs 536.8 million, up from 245.2 million in Q1 FY26. The asset quality was good, with the company maintaining a zero NPA book. Operating efficiency was strong with a cost-to-income ratio below 15%. Return ratios were healthy, with a return on assets of 5.1% and return on equity of 14%. Looking ahead, the company is expected to deliver consistent numbers and profitability in a high inflation and uncertain global environment. Manaksia Coated Metals and Industries. Manaksia Coated Metals and Industries manufactures and exports quality galvanized and pre-painted steel in sheets and coils. The company was demerged as a separate entity in 2010, and its core operations are housed in an advanced flagship steel facility in Kutch, Gujarat, which is the hub of the company's coated steel operations. Promoter holding increased from 57.46% in March 2026 to 57.78% in June 2026. The company had a resilient start to FY27 with a sequential growth in revenue, EBITDA, and profitability supported by a robust export demand. Total income for 1Q FY27 stood at Rs 2.6 billion, up 4% YOY and 15% QOQ from Rs 2.5 billion in Q1 FY26 and Rs 2.3 billion in 4Q FY26 respectively. EBITDA rose to Rs 290.9 million in 1Q FY27, up 2% YOY and 86% QOQ, with EBITDA margin at 11.1%, recovering strongly from 6.8% in the seasonally weak Q4 FY26. Net profit came in at Rs 141 million, up 1% YOY and 163% QOQ, with the net margin at 5.4%. NCC Limited. NCC is a diversified infrastructure and construction company. It has built landmark public infrastructure, including hospitals such as AIIMS, medical colleges, airports, metro systems, and large-scale housing developments. The company is primarily an engineering, procurement, and construction EPC contractor, operating in 7 business verticals: buildings, transportation, water and environment, electrical T&D, mining, railways, and irrigation. The promoter holding increased from 22.81% in March 2026 to 23.08% in June 2026. In FY26, NCC reported a revenue of 208.2 billion rupees, down 6% YOY. The order book expanded 16% to 830 billion rupees. The operating profit stood at rupees 18.4 billion with an 8.8% margin. The profit after tax came in at 7.2 billion rupees with a 3.5% margin. The debt to equity ratio increased to 0.3 from 0.2 a year ago. Promoter buying is a positive sign as it indicates the management's confidence in the business. Recent stake buys in companies like SG Finserve, NCC, and Manaksia coated metals have caught investors' attention in the stock market. However, promoter buying alone should never be the reason to invest in a stock. Investors must consider the company's revenue growth, margin profile, balance sheet strength, and valuations. Treat an increase in promoter stake as the starting point for your research and perform a detailed follow-up analysis. The best investment opportunities are those where management confidence is supported by strong business performance and attractive valuations. Thank you for watching.